This is your absolute blueprint and guide to become a consistently profitable trader. Fact is, many beginner traders fail in trading because they are trading what they don't understand. And it's not their fault, it's the system. But you can never win trading what you don't understand. On our previous video, we went over the fundamentals of indices to help you trade what you know and understand. On today's video, we're starting on page 6, module 2, how to trade indices, which moves us to the technical side of trading indices. Make sure that you download the full guide. The link will be on the description box below. Let's get into today's video. First of all, to trade indices profitably, you need to know what type of indices you are trading. You can either trade spot indices or index futures. Cash indices are traded as the spot price of the index. By spot price, I mean the current price of the underlying market. Cash indices have tighter spreads than index futures. Their tight spreads makes them favorable to day traders and scalpers, because day traders and scalpers are trading with a short-term outlook in mind. They just want to trade now, make money now, or make money later today. So they open and close trading positions within the same day. Now, if that is something that you are currently doing, or it sounds like something that you would like to do when you become a trader, you will want to trade cash indices because they come with tighter spreads. Spread is the difference between the buying and the selling price. Cash indices are traded through CFDs. A CFD is a derivative product that allows you as a trader to take or to trade both the upward direction or the upward trend and the downward direction. In our advanced trading term, we'll say a CFD is a derivative that allows you to go long or to go short on price movement of a financial instrument without having to own the underlying assets, which means the same thing with a CFD is a derivative that allows you to buy in the upward going trend or to sell in the downward going trend on a price movement of a financial instrument without owning the underlying assets.
You're gonna come to your broker's dashboard, and there at the bottom is written home, fund, trade, calendar, and your profile. Brokers are not the same. Whichever broker that you use, try to find this section. If you want the link to this one that I'm using right now, it will be linked on the description box. After clicking the trade section, you're gonna look above and you see there's your favorite pairs, your popular pairs, your forex, your stock, your metals, your futures, your cryptos, your ETFs, your sports. And sports is what you want to focus on if you want to trade cash indices. So you're gonna go ahead and click on sports and you'll see the list of all the indices that you can trade in CFDs. If you are not sure which one to trade, you come back here on popular and pick any that you like. If it's written CFD, is most likely an index. So as you can see, the first one right there, we have US 100, which is Nasdaq. You can see we have US 30 is also written CFD, and so on and so forth. There are many others. You can scroll down and let's see, I see another CFD which is German 40. Here's another CFD is S&P 500. So as I have said, that this broker just makes it easy for you because they all come in CFDs, unless if you want to go directly to the futures option right there and trade them in futures. But other than that, you're gonna most likely get them here on the popular section as CFDs. It's already set up this way for your convenience. Remember that we said CFDs are good for us day traders and scalpers because we trade with the short-term market outlook in mind. And all these CFDs that you see here have tighter spreads, which is good for us because of the types of traders that we are. For your own convenience, it's better to pack your favorite indices here on this section. As you can see, it's empty for now here because I wanted to pack it with you so that I can show you how easy it is to get it done. It takes less than a minute. Come back here on popular and click on your favorite index. Of course, you know mine is the US30, so you just click the star here on the US30, tap on the star, and then it is automatically added. Then you move to the next one. I'm gonna add Nasdaq now. Tap on the star and it's automatically added. Now let's add the last one. Is gonna be S&P 500 and it is added to our favorites list. Now let's check on our list and we can see that all our favorite pairs are there and ready to be traded on our favorites. So whenever we come to the charts, we can just click on any of these pairs and start analyzing and trading from here. Simple. Get into your broker, you go there to trade section, you click your favorite pair, you add it to favorites, and then whenever you want to trade, you don't have to go and search and look and search for your pairs. Try to find your favorite pair because it is already set up there. You just come here to your favorites, you find your favorite pairs, and you start trading.
When you open a CFD trading position, you enter into agreement with the broker to exchange the difference in price between the opening and the closing position.
This is how you open a CFD trading position with a broker. You simply tap into your favorite pair as I have tapped on the US30. Then the US30 chart will open. After your chart has loaded and opened, then you can start trading. When you place a trade, you automatically enter into contract with a broker. And the contract says you as a trader will make or lose money based on the open and the closing price of your trading position. Let me break it down further for you for clearer understanding. Example, right now Dow Jones or the US30 is selling at 44.458,92 and is buying at 44.4997. So this price is this selling price. If you enter contracts right now and you are selling the US30, this is the price that you will sell the US30 from. And if you decide that you are buying the US30, this is the price that you will be buying the US30 from right now on the spot currently. As you can see that this price is the same as this price and this price is the same as this price. It's literally just the same thing. When you open a CFD position, you enter into agreement with the broker to exchange the difference between the opening and the closing of the position. If I say right now, the US30 will continue to buy. As you can well see that currently the US30 is kind of consolidating on a very bullish trend. So if I say the US30 will continue to buy and I put my trend line right here, then if the US30 continues to go up and I said it's gonna buy, I put my stop loss right here and the US30 does respect my speculation, it continues to go up from this point, then I will be making my profits due to the price fluctuation to the upside direction, because this is the contract that I have with the broker. And if I said the US30 will continue to buy and the US30 starts falling from this point, then I will lose money. The difference between this price and this price is called the spread. If you did not know what the spread is, you often hear people saying or talking about the spread, the spread, the spread. The spread is just the difference between the sell price and the buy price. As you can see here, the difference between the sell price and the buy price is 2.05. So this is the spread for this transaction.
And the index futures, you are basically trading the same particular pair, but as the futures price, which comes costly to a aspiring trader or a beginner trader, or a trader that does not have a huge sums of starting capital to invest in the trading markets. Index futures have wider spreads, which comes with the overnight funding, and they are preferred by traders with long-term market outlook. So if you want to swing the market for 3 months trading, like focusing on the same pair, you may want to trade your indices on the index futures market, so that you can save on cost because they come with wider spreads. After registering your account with the legit broker, you come to page 8 and select the index you want to trade. It's important to select the index that best suits your trading style. This will depend on your risk appetite, risk tolerance, available trading capital, and your patience span. We are not the same as traders. Some people are not this patient at all. Most people, in fact, are not this patient at all. So when deciding on your index to trade, you must obviously develop a relationship with this index, which is something that we'll get into the next video when we speak about something like journaling, trading plan, and so forth. But when choosing the index that you want, you must consider lots of things. It does not just come with your favorites or the most popular index. Even though you may start there and develop the trading relationship with this index using the same steps and systems that I use and I'm going to tell you about. But for example, US30 has proven to be more volatile than Nasdaq and S&P 500. So if you have a high risk tolerance like me, and you have a trading strategy that has proven to work consistently over time, that has an edge in the market, you may want to day trade or scalp the US30, because if you were on the losing trade, you will lose money today. If your trade went too well, it's just everything just happens now. We make money now or we lose money now, but it will be a now type of thing. When you set that entry point and that stop target and that TP target, it's done. All you have to do is wait for the price to get into your entry zone and it's gonna enter you, which is why it is very important to also choose the right trading broker. The broker that I trade with doesn't mean, trust me, I have played around different brokers, and some of my mentees, I shared with them these things when choosing the right broker. Some of them I show them like, listen, I took this trade yesterday, and the trade I have shared also on this channel, one of those sagas whereby I took a trade with a certain broker and that trade the broker didn't put me on this trade when the trade, it was a mess, a hot mess. But this broker, I'm not saying register your account with this broker. You don't have to do this if you don't want to, but it doesn't miss. When you say, when the price gets here, put me into this trade, it will definitely put you into the trade. And when it reaches your target, it will definitely put you out of the trade. When you trade the US30, smooth thing. You enter now, you make money now, and US30 is very volatile. I know that if I use a certain lot size and my targets per day will be this much, and I can aim on making this particular amount same day consistently, because all my trading assets are in order. I have developed a relationship with the pair. I been journaling since forever now, this very same prayer, and I have a working trading plan which comes with a trading strategy. By the way, if you do want to use the same journal and the same trading plan that I use to make money trading the USDT, I'll also link it on the description box. You can go ahead and get those. But if you are looking for something like Nasdaq is also volatile, but not as volatile as USDT. But if you are looking for something less volatile, less aggressive, you may want to hop to Nasdaq. If you want to have something that is working but not as volatile, not as fast, not as high paying, because if you are making more money, it means also if you are losing more money. But if you want to trade something similar to Nasdaq, something similar to USDT, but less aggressive, you see, you may want to trade S&P 500. So according to your appetite, risk tolerance, and trading capital that you have on your trading account, decide the pair that you would like to go for. Next up, you're inside the markets now and you have found your favorites or the pair that aligns with your personality. So next thing, you want to decide whether you want to go long or you want to go short. Going long, it means you are prophesying on the value of this index increasing, and going short means that you are prophesying on the value of this index decreasing. If the economic outlook for the economy or sector looks good, based on the performance of the companies of an index, obviously you would want to take a long position because you will make more profits this way. And if the economy and the companies didn't do well, you can prophesy on the index decreasing that particular month. Before we even get to the technical side of things, we will learn technicals, we will master technicals, we will devour technicals, and we will slay the oomph out of technicals. It is also important to understand what makes or what drives the technicals. After deciding on the direction of the market, then you want to make sure that you set your stop loss and your take profits. This is very important to manage your risk while trading indices. A stop loss will close your position automatically if the trade did not go to your expected direction, and take profits will stop the trade automatically when the trend reaches your desired profit targets, helping you avoid making money as the trend goes to your direction and losing all your money again, because this happens a lot, especially if you are trading with bad brokers. That's no broker has your best interest at heart, but some brokers are really evil. That has happened to me like various times, and it hurts knowing that you didn't miss a daily target this day because a broker just decided to mess up everything for you. It's very hateful. On the next video, we will be developing a trading strategy for trading indices, which is page 11. Make sure that you download this trading guide for free if you want to continue learning for yourself and develop your trading skills. May the peace of God rule in your heart. I'll see you on the next video.